Hey everyone, Trader Tim bringing another Monday market analysis video. Today's Monday, November 10th, 2014, and once again we've made new highs in the broader market in the S&P, coupled with a little bit lighter volume. So with the gap ups that we've had here, the big gap up on Halloween, the 31st, and then we've had a couple other gap ups in these small body candles, coupled with the lower volume. You know, not giving a whole lot of conviction in terms of running right to the target. I've got the S&P up. If I switch over to the ES and we look at the 1826, 50% long, that has a target of 2100. I don't think that will go straight to 2100 just because the volume is kind of rolling over. We're not really building a super strong support level here. So, a little bit of a pullback. We could see a retracement all the way back to the full 50% retracement, but I don't think that it'll be any sort of violent pullback. If we go back to the profit charts, there is a lot of support back here as well as back in July. So, a small pullback, maybe pulling back, filling the gap that we've made back at the end of October is plausible, and then kind of getting a push to 2100 into the end of the year, kind of encompassing that Santa Claus rally in the beginning of December, taking us into the Christmas holiday. So that's kind of what I'm looking at on the broader market. Whoops. If I flip back and we take a look at the volatility index, we have a big pullback in the VIX, all the way down to, kind of basically where we were sitting all summer, the low teens. And so if we, continue to kind of sit here in the low teens, I wouldn't find it very plausible for us to just, completely fall out of the sky. If we have a little bit of a spike, maybe up to 16, 17, 18, and a little bit of a pullback, some bigger volume days to the downside, that would be, not overly bearish, but it would give us a little bit of volatility that would help some of the intraday ranges. So, if we can get back out of the low teens, maybe up to the mid-teens and upper teens, that would help widen the ranges. You can see how small these bodies are of the candles as we've kind of just chopped around up here. If we look at the Dow, pretty much the same scenario. The NASDAQ, almost the same. We've got more of sideways action on the NASDAQ, but the same kind of declining volume as the markets are moving higher. And then the one that stands out is the Russell, and the Russell has not made new highs. It hasn't even breached this prior swing high. So still a very clear inverted head and shoulders looking to be forming. The left shoulder, the head, and then it would be foreseeable that we kind of pull back and rally, and then fill out that right shoulder, and then break to new highs. So that's kind of what I'm looking at in the broader market. The ES is trading pretty well. The other market that's trading well that I haven't talked about too much is the 6E, the Euro. And I've got the 512 tick chart up, and this is just today's price action. And you can see that if we just start from highs early in the morning, we have a nice series of retracements that kind of take us lower. And then once we break down and really start taking off, we went into extensions, and those went one extension, two extensions, and now we're coming back up to a third extension short. And we can go back for the last couple of weeks, and the markets have been really technical, breaking out of the prior swing high, making a new high in the trend change. So the market comes down and then forms a low, and then we break the prior swing high with this high over here, and then we can take the first setup in the new direction. And those setups are all working really well right now, and it makes sense, especially in the fall and the spring, to see really technical markets. It just, the volume and things kind of die off in the summer, and then around Christmas and New Year's, things kind of subside, but October, November, and then February, March, April are all really good, great technical trading months. So the euro is definitely one that I've been more active in as of late, and looking for the markets to kind of maybe roll over a little bit. You can see on the ES here that same inverted head and shoulders, the left shoulder, big spike down and rally, and then probably forming a right shoulder, and that right shoulder would, oops, not that one. The right shoulder would kind of, probably come down around 1950, kind of that region where it's a little bit higher than the previous low back here, and then kind of low, and then send us to new highs to that 2100 target. So all things looking bullish on the S&P, and really the only way that I would get overly bearish and see this inverted head and shoulders as failing is if we break down below the low of beginning of August back here. So we'll keep it short and sweet for this week. Keep an eye on the VIX. If we do get a spike, that should signal a little bit of a decline, but I don't think it'll be hard and fast like we saw back here in these couple of days where we're dropping 50 points over 3 or 4 days on the S&P. So if you have questions, shoot me an email, tim@EminiMind.com, and we'll talk to you next week. Thanks a lot.